Hey everyone, it is Evan here from the Trade Risk on Friday, May 24th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and finish off looking at some sector analysis. So jumping into our technicals dashboard here, you can see markets closed mixed here on Friday. Dow, S&P, and IWM all finishing in positive territory. The Qs just in slightly red territory. The notable difference here, though, is that the 5-day change back into negative territory. Those early week gains that we saw, that pop higher that we saw on Tuesday, we could not hold on to those gains in the market, and we did start to trade off into the end of the week below the 10 SMA, below the 50 SMA across all the major indices once again, and we are now starting to get close to that 200 period simple moving average in some of those major indices. As we can see, looking at sector performance here, we get a more of a tilt and skew to the downside in towards the end of the week. Semiconductors still lagging and underperforming notably, minus 6.38% on the past 5 days, followed by the Dow Transports and Energy. What's holding positive, still utilities, healthcare, and biotech, all trying to hold into some positive numbers for the past 5 days. When we look at major markets, we have TLT up and to the right here, following through on the strongest performing market here, followed by silver and 10-year bonds. When we go down to underperforming assets, we have oil, crude oil, China, and natural gas. So let's jump into the charts. Let's take a look at what's gone on here from a price action perspective. This is the S&P 500 cash market, and this is the weekly time frame that we're looking at. You can see we did finish lower, minus 1.1% here this week. But if we zoom in a little bit and just look a little bit closer at this action, you can see that we did get a inside week printed here. That means that we traded entirely within the prior week's range, so below last week's highs, above last week's lows. So while we did chop around quite a bit and move back and forth up and down throughout the course of this week, we really, from a bigger picture perspective, didn't really go anywhere. We made a lot of noise, but the trend here is still, kind of sideways. We're pulling back, but sideways within last week's range, and we are still holding above the key relevant 2800 level that we have been looking at as sort of intermediate to even longer term support that we'd really want to see this market hang on to if we are going to contain this pullback to a nice and orderly sort of 5 to 7% or 5% pullback in this case above 2800. So weekly inside bar volume a little bit lighter, 2872. That's pretty much where the highs were from this week as well. That's the midpoint of this range, kind of point of control, if you will, and that's still the relevant level that I'd be paying attention to on the upside. 2872 all the way up to last week's highs around 2890. That's the band there that we'd want to see the bulls start to break us out to the upside if we are going to start to get some traction and momentum and trend sort of resumed back in the bull case. And then of course we have the all-time highs up there around 2950 or so. And of course on the downside, as we talked about, 2800, that is the important level to hold. So far so good. It was disappointing to see that from the bull standpoint, we were trading higher earlier in the week. If we go down to the daily chart now, you can see we did get this pop up on Tuesday. We had our midweek video on Tuesday here following this almost 1% move here in the S&P 500. And that was at least encouraging to say, look, the bull's starting to get some traction here. And our thought process was, or our analysis was, let's see if they can hold on to those gains into the end of the week to continue to sort of firm up the bid in this area. And we can see that was not the case. We did not, or were not able to hold on to those gains. We had a mixed session here, down session on Wednesday, and then Thursday we saw that volatility start to resume and pick back up to the downside as we traded lower 1%, and Friday again was, a fairly muted day. So all in all, one thing we can surely still claim here is that it is choppy out there right now in the short term. The daily chart is pretty much, as sideways and messy and choppy as you're going to get. And it looks like that's still here to continue. Once again, I do think if we can continue to contain the chop and wait for and continue to stay patient for some potential volatility, compression, and to continue to see the VIX kind of unwind, that would be constructive, or that would start to get us towards the end of perhaps this pullback. And so long as it takes place above 2,800, but we have to take things one step at a time. And if we start to lose this level next week, then I do think we have an air pocket down here to really start to tread lower. And that does open up the gates for certainly a bigger pullback from a bigger picture perspective. So 2,800, 2,872, those are the levels I'd be paying attention to. Expect that chop to continue. Expect back and forth trading in both directions. You can find opportunities, especially shorter term active traders now. This is where intraday ranges start to expand a little bit or stay elevated for more range, more move to capture throughout the day. But for the shorter term swing trading perspective, it can very much be tricky and can easily get chopped up. So know your time frame and be careful there as we sort of still navigate some uncertain waters, to say the least. So that is the S&P 500. Those are the levels to pay attention to. If we look at the IWM, when we came into this week, this was really the major index that we wanted to pay attention to, because we did have, remember from last Friday, this was the view that we were given last Friday. So it was really kind of this bear flag, potential bear flag look here, and we were watching to see how this would resolve itself. We finished off last week on a negative note here, higher volume, weak close, and then when we came into this week, we saw an initial move down. We saw this encouraging move back up on Tuesday, and this is where the false moves and the head fakes and this choppy environment really play out, where you started to get a little bit of hope here on Tuesday as we started to launch back up into this range, and then we just gave it all back and then some on Thursday, and of course into Friday we did rally back, but we broke down here. We tested the March lows around 148. This is where I think this is going to be the important level, just like 2,800 is in the S&P 500. This 148 area, March lows, that's going to be the important zone to hold here for the Russell 2000. The MACD does remain in positive territory here on the weekly chart. And you can see we're kind of coming back to test that. A good spot for the market to hold on to, along with 2,800 in the S&P 500, if we are going to keep this pullback contained. Now, one other thing I'll note is just when we look at the bigger picture here for the S&P 500, this is a 5% pullback. That's what we've seen so far, from highs to lows, approximately 5%. These are sort of your standard market pullbacks, a 5%, 5 to 7% pullback. That tends to be what you see in markets, once or twice a year, historically on average. Don't quote me exactly on that figure, but these are sort of standard pullbacks that we are basically, should be expected in up moves and even in the bull markets. So, right now, I think this has been pretty standard kind of volatility and pullback in the market. If we start to see the VIX start soaring above 20 and we start breaking above these bigger levels, then we start to think about potentially going to that 10%, 12% type of pullback, a more steep kind of reset, if you will, of recent, strong performance throughout the course of this year. But keep things in perspective, 5%. Again, if you're getting chopped up here, just try and zoom out, sit on your hands a bit more, and kind of sit on the sidelines. So that's the IWM. That was a little side tangent there. Let's go to the Qs. I think this is the last here to talk about. So right back to that 178 level. You can see MACD making new lows here on Friday. So that I don't like to see. That is a near-term sort of bear sort of evidence there, when we still continue to see MACD making new lows. Suggests to me that, it still is going to need some more time here to firm up. The Q is kind of notably underperforming now a bit, as that semiconductor sector really weighs, 2.67% on the downside, and flirting exactly with last week's lows. So the Qs here at a good spot to hold. We'll see if they can do it. A quick move to the upside will certainly be in the bulls' best interest, but you can see here, you got kind of this, maybe a little head and shoulders here, although I know that's probably not an exact pattern that symmetrically lines up, but something to think about here as this 178 level is on test into next week. So that, I think, covers all the major markets there. Let's take a look at the VIX real quick. You can see that popped up a little bit towards the end of the week here, had that 15% move on Thursday, gave a little bit back on Friday. So we're trading around 16, which again, is pretty much at its long-term average and seems pretty appropriate for the two-way trading that we're seeing at this time. Don't forget, it is a long weekend, so we do have markets closed on Monday. So, perhaps a little bit of anxiety or getting out of the way here onto the long weekend. Always having that third day markets closed gives you a little more elevated risk holding things overnight. So do keep that in mind. Markets will be back open on Tuesday. So let's jump into some of the other majors now. We'll go to TLT next, which did benefit from sort of the equity uncertainty this week. We saw a 1.42% move here in the TLT, taking out its year-to-date highs and starting to really move back into this range that we saw back in 2017 between, call it 122 all the way up to 129. That's where we traded for the most of 2017. We're heading back up into the top end of that range after taking out this week's highs. Nice kind of gap, move higher, strong push, MACD moving higher as well. So some good action there for the Treasury bulls. We do have, or the bond bulls, I should say, we did end up scaling some of this position off on Thursday here. We sold about a third of it, and we continue to hold a position here in TLT, continue to trail up our stop, but we did take some profits and continuing to raise that stop as prices move higher in TLT. Next up, if we go to USO, this here broke down pretty fierce on Thursday. One of the things we talked about in Tuesday's video was this setup that we saw with some nice tight trading ranges, some tight price action here for 4 days worth of trading between 13 and 13.25, kind of looking for that pop one way or the other. We certainly know in hindsight now which way that ended up occurring. It was to the downside. We did continue to break down and continue to pull back and trying to test the $12 area where we did break out from in March, found support in March as well, and we're looking initially to find some support here as well. So sellers, new wave of selling kind of coming here in USO, so let that dust settle a bit, but sellers in control there for oil. If we go to natural gas next, you can see this on the week here did finish lower as well, 1.89% to the downside. If we look at the daily chart a little bit, kind of thrusting below this channel, getting a little bit of rebound here into the end of the week, but still kind of in a messy spot, all things considered. We do have some positive momentum, kind of divergence here brewing with MACD and what price is doing here on the daily chart, but still, again, a lot of cross currents there and mixed signals overall for natural gas. Last but not least is we have metals. GLD here on the week was positive, 0.5% to the upside, still hanging on pretty tight and just close grips to this 121 level. This is where we've been basically consolidating around for the past month and a half already. We still haven't got the convincing move higher one way or the other. It's still been kind of moving in this sort of price area here, and waiting for it to sort of make up its mind. We still have a little bit of positive momentum divergence there for GLD, but we're really going to want to see follow through back over 122, 123 to get a little more momentum and positive action going there. And for silver, we did get the rebound off of the lows, but again, this is still in kind of a tough spot, downtrend overall. Sellers still mostly in control here. We're going to need to see more convincing action, more follow through to the upside, and break the series of lower highs here to get excited about metals, silver, and both gold. So that covers all of the majors. Let's go to some of the sector analysis now. We'll look at top performing, bottom performing sectors. XLU really stole the show this week, almost 2% to the upside. If we look on the weekly chart here, getting a nice follow-through breakout week, making new highs for utilities, a very defensive area of the market. Makes sense as some of the uncertainty here and the drop in yields. We start to see more chase for yield, more chase for sort of defensive action. XLU is a good spot for it, and that really is paving the way for some of those moves. Healthcare also here, 1.27%, some nice relative strength. Notice, just kind of the higher low that's trying to get put in here. Remember, it had a very fierce breakdown, was really early to the scene here in April, but since then it has been recovering and is acting more as a defensive area. MACD trying to hold back in positive territory and some good relative strength here. So not out of the woods, but there are a lot of individual names. I know at least from my scans, there do seem to be a lot of names in the healthcare and biotech space, which biotech number 3 here was positive on the week. It is still, if we look at XBI and IBB was number 4, both of these sectors in biotech specifically are trying to hang on. And yes, they were one of the first to break down. They are trying to catch themselves here, trying not to break down to new lows. In fact, again, we look at the S&P, we look at the Qs, we look at the IWM, the Dow, all negative on the week, trading around last week's lows. And here we have biotech, which is holding positive on the week, trying to actually challenge some resistance here, some prior support at this 83.50 area. So be interesting to see if we do continue to see that strength hold up here in biotech. Keep an eye on some of the individual names. Are getting a lot of those on my scans this week. For semis, or for the laggards this week, underperformance, semiconductors, minus 6% this week. MACD continues to make new lows. We've now suffered for semiconductors a 18% pullback off of the highs. So in very short order, we've traded off 18% in basically, less than a month, 3.5 weeks worth of trading. So a very fast unwind, heavy volume. We're starting to come back into $99 area here. This is where we broke out in February. This is where we found resistance in 2018. So I would expect maybe a little bit of reaction here, just given how oversold and how quick this move came into this area. Wouldn't be surprised to see a little bit of stabilization or a little bit of reaction here next week. Maybe a quick undercut into the 97 area, and then some type of rebound, something to pay attention to if you're an active trader there. But semiconductors kind of coming in for that hard landing retest, if you will. XLE was the second worst performing this week. This makes sense. Oil breaking down pretty hard. XLE feeling the pain. It was consolidating for a couple of weeks here, nice and tight, and now getting a fresh move to new lows. It's pretty messy, pretty ugly action here, all things considered. If we look at the weekly chart, you do have a MACD that is, at least holding up. It really got stretched to the downside towards the end of 2018. It did get that recovery up here, and now we're starting to, maybe look for some type of structural higher low to get put in. Around $60 or so would be a good spot for it, but right now it's still just in a real tough spot to want to buy the dip blindly. Last but not least, we have technology. If we look here, it is holding above, kind of looks like the Qs. It's holding at the 72.50 area. That's where we found some support in late March. It's going to be a good spot for it to try and hold on to. MACD is making fresh lows as of Friday, so not encouraging. Doesn't give me much confidence in wanting to say buy the dip blindly here, but we want to see if this ultimately does hold, and something that we do want to pay attention to next week around that $72, $73 area. So that is it. That is what I have for this week. More volatility, more chop for us to see how we fare up next week. Again, we have markets closed on Monday, so we got a short week next week, but we'll be back on Tuesday. Have a great long weekend. Thanks so much, as always, for tuning in and watching. You can subscribe on our YouTube channel or follow us on the Trade Risk. Have a good weekend, and we will see you next week.